Now, when it comes to money laundering, terror financing, as well as proliferation financing, we cannot speak of these threats without touching on red flags. Okay, it is inevitable, and in fact, the reason we participate in, we are a member of the FATF, and we participate in engaging on these topics and identifying red flags, is because these red flags may be an indicator to us that something wrong is happening or something untoward is happening, and something needs to be investigated. I'll just read from my screen the definition of a red flag. This comes from the Financial Action Task Force Guidance for Real Estate Agents, which I would also advise you to have a read at that, because it is very helpful in giving you a good understanding, and it's a very good guide for understanding money laundering and terror financing from a FATF perspective, and why we have identified the real estate agency industry as one of the regulated, or one of the industries that need to be regulated by us. So the definition is that a red flag is any fact or set of facts or circumstances that, when viewed on their own or in combination with other facts and circumstances, indicate a higher risk of illicit activity. A red flag may be used as a shorthand for an indicator of risk that puts an investigating estate agent on notice that further checks or other appropriate safeguarding actions will be required. All right. So the mere presence of a red flag indicator is not necessarily a basis for a suspicion of money laundering or terrorist financing, as a client may be able to provide a legitimate explanation. The red flag indicator should assist estate agents in applying a risk-based approach to their CDD requirements. Where there are a number of red flag indicators, it is more likely that an estate agent should have suspicion that money laundering or terror financing is occurring. Few things I'd like to point out from this slide is that red flags are indicators, like I said earlier, that something untoward may be happening. And I use may very deliberately, because it does not necessarily mean that when you identify a red flag, then there's something wrong happening or something criminal happening. And you can see this at the bottom where it says a client may be able to provide legitimate reasons. So that means if maybe I come to your institution and I say, I'd like to purchase a piece of property, and you say, okay, Snaya, could you please present to me your ID document, because I'd like to identify and verify you. And I say to you, oh, I'm not able to give you my ID right now. Now, that at the face of it, it's a red flag, because why are you not able to provide me with this document that you should have readily available, and you should be willing to give it to me because legislation requires me to do so. But it may be the fact that I recently lost my ID, and maybe I only have a passport. Would you be willing to take my passport, for an example? And if the answer is yes, it's still an identification document. So this is what we mean when we say, and I'm just using a very simple example of how do we go about handling red flags. It means that if once you have probed and asked questions, the relevant questions about why I'm not able to present to you or provide you with the information that I'm supposed to be able to provide to you. If I'm evasive, that is suspicious behavior. If I'm aggressive, that is a suspicious behavior. If I do not want to give you the information, or I keep asking questions that if you think about it, it seems as if I'm trying to avoid giving you this information about myself, then chances are there is something illegal that's happening and I'm trying to hide something. And so that's when you should file an STR with the FIC. But if I provide you with a legitimate explanation as to why I'm unable to provide you with this information, then you can use you can think of other alternatives to achieve the same goal. Like I said, maybe instead of using an ID document, you could use a passport, or you could use maybe a database from a department that can verify people's identities, a local one at that maybe. So these are just the examples that we need to think about, and things that we need to think about in a scenario where something at the face of it may look like it's a red flag. But if you maybe ask a few questions or you probe enough, you may find, and we're not asking you to be investigators. We're just saying ask the right questions, so that if you do not get a legitimate and understandable explanation as to why information cannot be provided to you, then there's an obligation for you to file an STR. Okay, so some of the general risks that we have identified and that we understand to be a threat to the real estate industry. We have listed a couple of them. I will not go through all of them because they are quite lengthy, but like I said, we'll share the slides and this will be beneficial to you when you have a read at the slides. So the purchase of property or real estate rather allows for the movement of large amounts of funds all at once in a single transaction as opposed to multiple transactions of smaller values. And because of that, so a client can come up to you and say, hey, I'd like to purchase a piece of property and I have 5 million Rand that I can deposit or make a transaction of that amount of money into your account. Would you accept that? And you're like, great, fantastic. We will arrange the sale of this property. I send the money to you immediately, and then after that, maybe a few days later, I then realize, oops, actually, I've changed my mind. I would not like to purchase this property anymore. That should raise some red flags because now you are willing to buy this property for 5 million. Maybe you've even gone for a viewing and you love the property, you're excited about it. And then now all of a sudden you have changed your mind. And yes, people are allowed to change their minds. But in the event that someone changes their minds shortly after making a transaction to your business account, that should raise some red flags because it may be that they want to launder money in the name of a refund, because now you'd have to refund that individual of the funds becomes a refund from real estate PTY Ltd, for an example. Okay, so these are the things that you need to be aware of and understand why you stand the risk of being used for laundering money. Another example would be buyers and sellers of real estate do not tend to maintain a relationship over a period of time with a regulated entity, which can make it difficult for estate agents to examine a series of transactions and identify suspicious transaction. We understand that in your scope of business, I may buy property from you today and that's it, we part ways, and then you're probably never going to see me again. That presents a risk because you cannot formulate a pattern of my behavior that would enable you to then identify red flags, suspicious behavior, and then file an STR report to the FIC. That becomes problematic. The lack of transparency into beneficial ownership information allows criminals to abuse nominee legal persons and arrangements such as shell companies and their involvement in money laundering, terrorist financing activities. So I may maybe appoint a power of attorney and say to maybe the person that I've elected that I'd like you to please purchase a piece of property for me on my behalf, and you're going to do everything for me because nobody can know that I am the ultimate beneficial owner of this piece of property. That again becomes a problem. So in the event that you've got a client who wants to purchase property, but they do not want to use their own identity and they've maybe elected a power of attorney, maybe it's their wife or maybe it's a relative of theirs, you need to drill down and understand who the ultimate beneficial owner of that property is before you proceed with the sale of that property. You cannot accept the person that is at the face of it. Yes, you'd have to IDNV the power of attorney because right now they're the ones who are purchasing the property and you are dealing with them, but they're actually purchasing this property on behalf of somebody, and you need to know who that individual is or what that legal entity may be, or if it's a trust, who the trust is or what the trust name is and who are the beneficiaries of that trust, and maybe even the legal owners, that being the trustees of that property as well. So there are various examples that we can use and that will highlight to you why the real estate industry is it's on our radar, and it is an industry that it just makes sense for us to regulate. There are also risks in your risk assessments that you should consider, like product and servicing risk. And those risks are, they indicate to you that if you are in this industry, this is what you need to identify as an inherent risk, and this is how you should go about mitigating the risk as well. An example of that would be your source of funds, where bonds are not obtained to fund property transactions or large amounts are paid as a deposit of the property the property, estate agents should ask additional questions to establish source of funding or consider submitting an SCR. Source of funds is where the funds are coming from, the immediate funds that are going to be used for the transaction. All right, so there's always a difference. Please note that there is a difference between source of funds as well as the source of wealth. So in the event of a source of funds, it's where the funds were held, where they were kept, and also what is the activity that generated those funds, like the immediate activity. And this is where you need to now ask your questions, probing questions, where a client maybe is unwilling to give you that kind of information. And sometimes you may have to apply enhanced due diligence to verify that the source of funds is exactly what the client tells you. And maybe even the source of wealth is consistent with what you know about the client, okay? So estate agents in South Africa that deal with high value properties should take steps to obtain information on their client's source of funds and test affordability in respect of the client's profile. Again, it's about what you know about your client. Is this consistent with what I know about my client, or is this inconsistent with what my client has told me? And if that is the case, then perhaps you should file an SCR. But if the information is consistent with what you know about your client, then you could proceed with the sale, but also make sure that you've got enough information to make you comfortable that you are dealing with a client who is legitimately purchasing property from you and not someone who's trying to conceal illicit funds. Okay, you also need to have a good understanding of the purpose at which for which the property is being purchased, because it may be that you're selling, maybe you're probably selling property to a drug trafficker, or someone maybe who wants to use the property as a supply house for drugs, or maybe they want to grow drugs in there or manufacture drugs. You have to have a fairly good understanding of what is the purpose of this property that is being purchased and what is the nature of my business relationship with this individual. And if it is suspicious, then you probably should file an SCR with the FIC. As customers, the type of customer as well that you're dealing with, it may be that you're dealing with a politically exposed individual, which presents a higher level of risk because they may have access to government funds, and so they may abuse those funds. Maybe it may be an individual that has been accused of corruption, and if you do adverse media search, convicted before, or they are undergoing a case of maybe corruption or embezzlement, and so that indicator or the adverse media that you find on the client should then ring the alarm bells that, okay, maybe I need to conduct enhanced due diligence. And by the way, the type of client that you accept in your business, it depends on the risk tolerance that you have. And this is what your RMCP allows you to do as well. It's to establish your risk tolerance within your business so that you understand the types of clients that you'd like to take in and the kind of business that you'd like to enter into. If on your risk appetite, you decide that, no, I can only accept low risk individuals because I've got limited resources, I cannot afford to hire maybe compliance practitioners or compliance people or an agency that will do thorough compliance for me, then maybe that limits me, and so I should only accept a lower level of risk and I have a low appetite for money laundering risk. Then maybe you will select a group of clients or a type of target markets that will allow your business to operate, because again, we don't want to put you out of business. We just want to make sure that you're adequately applying anti-money laundering and counter-terrorist financing measures within your business. If, however, you have an appetite for high-risk individuals, then you can go ahead and operate your business, but just make sure that you have the appropriate and adequate controls to, to operate within that business. And so you will make that determination within your RMCP through your risk assessments and through the information that we've provided you as an FIU within South Africa, the FIC, the sector risk assessments that we issue out, the notices that we issue out, court cases that can come out, adverse media. You determine your risk appetite through all of these controls and all of these elements and factors that you need to take into consideration. Right? There's transactions as well that you need to monitor, transactional use, the use of cash, especially in South Africa, because it is a cash intensive country. We've got industries that only operate in cash. So that doesn't mean that if your client comes to you with cash, that definitely the funds are suspicious and they're illicit. It's a possibility, but it's not a guaranteed fact that it may be the case. And that is why you'd have to apply your due diligence. And if the risk is higher, you would then have to apply enhanced due diligence as well. And then there's delivery channels as well that are being used. Who is out there to spread the word about your institution, and what money laundering risk do they present to institution? And these are all the risk factors. So you just have to be careful in your understanding of risk factors versus red flags. Your risk factors are the elements that you use, or the factors and indicators that you use to measure risk, your business risk, as well as your client risk. And that could include the national risk assessment from a South African perspective that would be issued by us, the FIC sector risk assessments that are issued by us as well. And that then should inform your business risk assessment as well as your client risk assessment. These are risk factors, whereas red flags are indicators that something wrong is happening or something may be wrong here. And I need to just probe a little bit further to satisfy myself that there's a legitimate reason for something that is inconsistent with what we know for it to be happening. Okay, and there's also geographic risk as well that you may be exposed to. If a client maybe is a foreign individual, they'd like to purchase property here in South Africa, you may have to ask why they're interested in buying property in South Africa. There may be legitimate reasons. Maybe South Africa is a good place to invest in property in. Maybe the economy is great. Say they want to buy property in Cape Town, for an example, and we know that property in Cape Town is doing really well. That may very well be the reason, and it's quite a legitimate reason. But if you're not getting good reasons as to why this individual would like to purchase property in South Africa, as opposed to maybe their home country, maybe they're not looking at relocating as well, then that should raise some alarm bells to you, and you should probe that information a little bit further. If maybe you have a branch overseas where it is a high risk jurisdiction, there are weak AML controls, that also should impact your RMCP and how you risk assess your clients that come from that jurisdiction where maybe there's high secrecy, and so presenting client information can be very difficult, and so you cannot conduct your CDD the way that South Africa expects you to. And like I said, if South Africa is the stricter of the two jurisdictions, it's probably wise for you to follow the South African route. Okay. I'm not going to go through all the lists because of time. I've actually gone over my time already. So I'm going to hand over to my colleague Victoria. She's going to go through suspicious transactions as other and other reports that you need to file as an accountable institution. And as I've promised, once you have registered, we will share the presentation slides to you, and then you'll have a look at all of the risk factors as well as the red flags that we have identified that will enable you to put together an effective RMCP and to thoroughly conduct your risk assessment as well. But thank you very much for joining the webinar, and please remember to complete the register, and later on we'll also have a survey that you'll have to complete so that we know how to tailor make these presentations and awareness sessions for you, and making sure that they are adequate and effective. But thank you very much. Have a good rest of your day.